Welcome to The Swing, the official newsletter of the Forex Trade Room, Volume 23, September 13, 2024. The US dollar weakened further on Friday, nearing the 101 mark as investors anticipate a possible rate cut from the Federal Reserve next week. Market sentiment has shifted, with a 59% chance of a 25 basis point cut and 41% odds of a larger 50 basis point reduction. This comes after higher jobless claims and reports from major financial outlets suggesting the Fed's decision could go either way. Unexpectedly high producer prices in August added another layer of uncertainty to the market's expectations. The Australian dollar jumped past 67 cents, reaching a one-week high, driven by a global rally in risk assets and rising commodity prices. The Reserve Bank of Australia remains hawkish, with officials stating that it's too early for rate cuts as inflation remains high. While Australia's labour market remains tight, wage growth may have peaked. The Aussie also gained from a weaker US dollar, as expectations rise for a larger rate cut from the Federal Reserve next week. The Canadian dollar weakened past 1.35 per USD, pulling back from its recent high. Canada's rising unemployment, now at 6.6%, exceeded forecasts and reinforced the Bank of Canada's decision to ease monetary policy. Despite this, the BOC remains cautious about inflation in housing and services. Meanwhile, weak U.S. job data increased speculation of a significant rate cut by the Federal Reserve, putting pressure on the U.S. dollar. The Japanese yen strengthened to 143 per dollar, reaching its highest level in a month. This boost comes as the Bank of Japan is expected to raise interest rates due to persistent inflation and rising wages. Real wages in Japan increased by 0.4% in July, and total cash earnings grew by 3.6%, though household spending fell short of expectations. The BOJ has hinted at further monetary adjustments if their economic outlook is met, and markets are now expecting a rate hike in December. The New Zealand dollar remained around 61 cents, supported by a weaker US dollar as markets anticipate the size of the Federal Reserve's upcoming rate cut. Additionally, optimism from China, New Zealand's largest trading partner, after President Xi urged stronger economic targets helped boost the Kiwi. Domestically, the Reserve Bank of New Zealand is expected to cut rates at its next two meetings, with a chance of a larger 50 basis point cut. The Kiwi is also benefiting from rising global equities and commodity prices, positioning it for a modest weekly gain. The Swiss franc climbed to below 0.85 per USD, nearing year-to-date highs as a weaker US dollar and disappointing job growth in the US fueled speculation of a significant Federal Reserve rate cut. Meanwhile, in Switzerland, inflation dropped to 1.1% in August, its lowest in 5 months, while the Swiss National Bank's recent rate cuts continue to support the currency. These factors helped strengthen the franc as it capitalized on the dollar's weakness. The British pound climbed above $1.31 as investors focus on the upcoming UK inflation report and the Bank of England's policy meeting. Markets expect the BoE to keep rates unchanged at 5%, with key inflation data due just before the announcement. July's economic stagnation added pressure, but analysts foresee the BoE beginning rate cuts in November, with rates potentially dropping to 3% by 2025. The euro rose above $1.10 as traders digested the ECB's latest monetary policy decision. The central bank lowered borrowing costs and noted that inflation is broadly in line with expectations. While headline inflation may rise later this year, core inflation is expected to remain slightly higher into 2024 and 2025. The ECB emphasized a restrictive and data-driven approach to future rate decisions, with traders now anticipating 1 or 2 more rate cuts by the end of the year. The Mexican peso strengthened to 19.25 per USD, recovering from a 2-year low as global factors took precedence over concerns about Mexico's judicial reform. The controversial reform, requiring the election of judges, has raised eyebrows but seems to have been fully priced into the market. Meanwhile, the US dollar weakened as traders anticipated the Federal Reserve's upcoming rate cuts, boosting the peso further. WTI crude oil slipped to $68.65 per barrel on Friday, ending a two-day winning streak as Gulf Coast production began to recover after storm disruptions. Despite supply issues, prices faced downward pressure due to concerns about weak demand, particularly in China, where crude imports have declined. The IEA also warned of slowing demand growth and a potential supply surplus in 2024. However, oil managed to record its first weekly gain in 5 weeks, rising by about 1.5%. Gold surged to a new record high of $2,580 per ounce on Friday, fueled by a weaker dollar and lower bond yields. This comes as economic data shows signs of a softening U.S. labor market and rising jobless claims, raising expectations of aggressive Federal Reserve rate cuts next week. While U.S. producer prices ticked up slightly, the overall trend suggests easing inflation. Meanwhile, the European Central Bank cut rates by 25 bps, signaling confidence in a continued decline in inflation. U.S. stocks closed higher on Friday as investors grew more optimistic about a larger interest rate cut from the Federal Reserve next week. The S&P 500 rose 0.5%, and the Nasdaq climbed 0.6%, both on track for 5 consecutive days of gains. Tech and semiconductor stocks led the market, with strong performances from Super Micro ARM Holdings, Microsoft, and Uber. Meanwhile, Boeing shares fell due to a strike, and Adobe tumbled on a weak earnings outlook. Rate cut expectations have surged, with a 47% chance now predicted for a 50 basis point reduction. This week, markets are focused on key central bank decisions and economic data releases. In the U.S., all eyes are on the Federal Reserve's interest rate decision and economic forecasts. The U.K. is set for a busy week with inflation updates and the Bank of England's rate decision. The Bank of Japan will make its policy call after its inflation report, while central banks in Brazil, Norway, Turkey, China, and South Africa are also expected to announce rate decisions. Look out for important economic data from Canada, Germany, New Zealand, Australia, and key trade figures from several regions. That brings us to the end of this week's Swing newsletter. As a reminder, don't forget to tune in for Mindset Mondays with Ryan Carthage starting at 6:30 a.m. Eastern Standard Time. Enjoy your weekend and good luck in the markets this week.